let's have a look at Level 2 Achievement Standard 91174, which is Accounting Concepts. And let's review the possible kinds of questions you could get asked in an exam. So here's a possible question. Retail food sole traders is a retail shop. Now what's in this question says is that the proprietor wants to borrow money from the bank. The bank manager has asked the proprietor to provide an income statement and statement of financial performance with the loan application, and we need to justify why Mike, the proprietor, should provide those statements to the bank manager. Okay, now the question is broken up again into smaller bits, and this is the three smaller bits: the purpose of preparing the income statement, and the statement of financial position for the bank manager, an explanation of why the qualitative characteristic of relevance is important to the bank manager, and whether Mike should disclose the fact that retail food is being sued for $50,000, and finally a limitation of using the income statement or statement of financial position to aid decision making. So let's have a look at this first bit, the purpose of Mike preparing the income statement for retail food sole trader and how the bank manager would use it along with the statement of financial position when making her decision about whether to lend to retail food. So the purpose actually is that the bank has asked for it, and that's why it's being prepared. But the above that, the purpose is that the bank manager, the income statement and the statement of financial position are going to inform the bank manager whether or not retail food sole traders could make repayments on the loan by listing income and expenses and resulting profit. And the statement of financial position will show the bank manager how financially stable retail sole traders is and their existing loans and assets. So that's the purpose. One, the bank manager's asked for it, and two, it provides that information. So that's a pretty good answer. The next part of the question is an explanation of why the qualitative characteristic of relevance is important for the bank manager to consider. Now the way to start this question is to actually define relevance. The second part of the question is, should he disclose that they're being sued for $50,000? And the answer is, of course, yes, he should. But it's that because the information is important, but it's not significant. It's not sufficient to say it's important. What's required is to discuss the concept of relevance, and we do that by simply stating what that concept is. The first line of this answer says the qualitative characteristic of relevance refers to information that can make a difference. The decision a user makes. In this case, the bank manager requires all the information that could impact on her decision to lend to retail food sole traders. As a consequence of this characteristic of relevance, Mike should disclose the fact that he's being sued, as this may impact on retail food's ability to repay the loan. The bank manager might be concerned about that being sued and losing, or perhaps even not losing, being sued will cause the business to fail or become unprofitable or less profitable. A few things I've added into the verbal explanation there. And the final thing is a limitation on using the income statement or statement of financial position to aid decision making. Possible limitations is that financial statements don't show non-financial information such as the quality of staff, location, range of inventory, levels of customer service, all which could have a big impact on retail food's profitability. In addition to that, you could probably also argue that the financial statements cover a fixed period of time and may not give an accurate picture of what is happening now.